four barriers to entry that we have always focused on. Battery technology, they are about 3 years ahead of everyone else. Artificial intelligence, no one's close for autonomous. Data collection for autonomous, no one, they're not even trying, it seems, in some ways to collect the data nationwide. And software as a service, so over-the-air software updates.
I see, towards late 2020, this flood of cash coming in. And I would say, okay, these are performance chasers. This is going to be hot money. These people are going to be scared off at the first downturn. We've seen a downturn, and I don't know, it looks pretty flat-ish. It's not this exodus of money right now. Have I got that right?
From the get-go, we have always said our investment time horizon is 5 years. And truly disruptive innovation in the public equity markets is valued today at roughly $10 trillion. If we are correct in terms of our 5 innovation platforms, DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technology, and the 14 technologies underlying or involved in those platforms, our analysis suggests that $10 trillion will scale to $210 trillion by 2030.
Let me ask you about a couple of the holdings. Tesla seems to be surprising on its production and things like that. But now we're coming up on the launch of this electric pickup truck from Ford and all this new coming competition from the legacy car makers. How do you think Tesla fares as that new competition arrives? Is it that you think that it has a head start by this point that is insurmountable, or what do you think?
Well, the 4 barriers to entry that we have always focused on. Battery technology, they are about 3 years ahead of everyone else. Artificial intelligence, no one's close for autonomous. Data collection for autonomous, no one, they're not even trying, it seems, in some ways to collect the data nationwide. And software as a service, so over-the-air software updates, we hear that GM and others are close to delivering on that promise. But the other companies will have to use their brands. Now, I've been saying for some time that many value stocks are in a bubble. And in the case of the traditional automakers, I want them to win. We want them to go electric. We think electric vehicle sales are going to go from 4.8 million last year to 40 million in 2026. But the only way we get there in that forecast is if the traditional auto manufacturers can scale.
What makes Cathie Wood so controversial? I look at you and I say, well, what you see is what you get. You get this rocket fuel portfolio. Yeah, it's down by half over the past year, but you're up 250% over the past 5 years. And either that's for you or it's not. Either you want a little bit of that in your portfolio or you don't. But I hear from people these very sort of emotional opinions, passionate opinions. It's like this lightning rod.
I think ARC is disrupting the financial services industry, particularly the asset management part of our industry. We're completely transparent. We give our research away. We have a 5-year investment time horizon when most of the financial world has a quarterly or 1-year time horizon. And we are not using benchmarks as our guide because benchmarks are backwards looking. And, I think we've created a brand out there and attracted a following of people who trust us. So I think radical transparency is not the DNA of the traditional financial world, and it's uncomfortable. It is confusing sometimes to hear people, critics say, there's no risk management. We have risk management throughout the firm. We have minority owners who are overseeing the risk in the firm. So we are looking at ARC as a slice of an equity allocation. And we have a study on our site, ARC-Invest, which shows that if you allocate, I think the study was 5 to 15% to ARC, take that from other equities, we will, over a 5-year period of time, increase your return per unit of risk. And that is why over the last 5 years,
we have outperformed when most active managers have not. We have outperformed the NASDAQ and the S&P and the MSCI. So I agree with you that what I call tried and true, the core, many people treating art as a satellite. I think many people are, and as a hedge against the massive disruption that we see from innovation during the next 5 to 10 years. It's going to hit some of the stocks in traditional benchmarks.
It's amazing how much engagement you're able to get. I think you and your colleagues together have like 1.7 million Twitter followers. And then you've got on the other side of the coin, sort of legacy active, where the PR people and the lawyers don't let them say anything. And if they do, it's very by the book and it doesn't really get anybody going. Nobody cares. I will say though, I think it's good. I think it helps your brand, but sometimes you'll say something and I'm like, well, why did she go that far? For example, the 40% return. Sometimes you'll throw out a number. I'm like, why set the bar that high and maybe upset your compliance person? Like, I think people are with you. Don't you want to under promise and over deliver?
So, well, in the beginning, we wanted people to just listen to our story, so maybe that's part legacy. But our chief compliance officer spent 4 years at the SEC as they were evolving guidelines for social media and marketing. And I started the firm saying, okay, after 0809, what did clients want? There was a loss of trust in the financial services industry, so transparency seemed to be very important. So that was, I invested much more in marketing at the very start of the firm than most would for this idea. In terms of the putting numbers out there, what we try and help people understand is the other side of what you said in terms of our return expectations based on growth, based on our research, is we're also, and people don't pick up on this as much, we're also saying these expectations are with an assumption that our multiples are going to compress dramatically. So I think many people are surprised to learn that Tesla's EV, so enterprise value to EBITDA expectation, our expectation in 2026 is 14 times. It's below a FANG today. Now, do we think it's really going to be there if autonomous takes off? No, we don't. But where you do see aggressive assumptions, and this has to do with exponential growth revolving around Wright's law, Moore's law's relative, we have a high degree of confidence in the unit growth characteristics as these technologies go mass market. We're really trying to communicate that these technologies cutting across sectors are creating explosive opportunities.